Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the New York Breakout Strategy, a powerful method designed to help you take advantage of high volatility and liquidity during the New York trading section. This strategy is ideal for identifying key price levels and capturing significant market moves as they happen. Make sure to watch until the end of this video as we will break down exactly how you can trade this strategy step by step and manage your risks effectively to maximize your trading results. Now let's understand the New York Breakout Strategy. This strategy is centered around the trading section during the New York trading section, which begins at 8 a.m. Eastern Time. This strategy you have to set your time frame in such a way that you would know where your New York trading time occurs. This section is particularly significant because it overlaps the London section for several hours, creating heightened market activity and increased trading opportunity. If you can see between the London section, there is going to be series of price. This should be the London section. Remember that my New York section is from 8 o'clock or 7 o'clock, as the case may be. You can see the heightened price action shows that the previous trading section, which is the London section, there was a lot of action in the market. There was a lot of momentum and trading opportunities in the market. What makes this strategy particularly effective is its focus on price action during specific time windows. This strategy works by identifying key price levels that forms during the London section and then capitalize on the breakout that occurs when the New York traders enter the market. This breakout often leads to strong directional move that you can trade with clear entries and exits. Now, judging from the New York section, let me use an indicator that would help me gauge the London, the New York, and my Asian section. This is my Asian section. So after my Asian section comes my New York section, comes my London section before my New York section, as the case may be. Now let's look at an example. The strategy actually performs best on major pairs, particularly the pairs involving US dollar, the Euro USD, GBP USD, and the USD JPY are prime candidates because they all experience significant volume during this period. This high liquidity means that you can enter and exit positions with minimal slippage, which is crucial for successful trading. So this strategy works best in trading the Euro USD, USD JPY, and other pairs that has the US dollar in them. Think of this New York session as a fresh wave of traders entering the market with new perspective and reaction to price action that occurs during the London section. When these traders push the price beyond key levels, it often triggers a cadence of orders that could lead to a substantial move in either direction. The beauty of this strategy lies in its simplicity. You are essentially waiting for market to show its hands before making your move. By focusing on clear price action levels, and waiting for confirmation of your trade breakout, you can minimize false signals and improve your trading accuracy. Now let's see how we can trade using the New York breakout strategy. To trade using the New York breakout strategy, you will need a structured approach that involves identifying key levels, waiting for a breakout, and managing your trade effectively. Let's break this down step by step. First step is identifying your key levels. The first step is to identify the key support and resistance level formed during the London section. If we look for levels like this is after your Asian section comes your London section. Your London section, I can see this support formed at this area. I can see this resistance forming at this area. These levels are crucial because they act as barriers that price needs to break during the New York section. Look at the price action between 3 a.m. and 8 a.m. Eastern time. 3 a.m. to 8 a.m. This is typical London section. This price action, this support was formed during 5 a.m. shows that it was formed during the London section. Mark the highs and low points of this range on your chart. These levels serve as your breakout zones. This step is important because it gives you a clear framework for where potential breakout might occur. Without these levels, trading breakouts become guesswork. The second step is to wait for the breakout. Once you have identified your key level, your next step is to wait for price to break above the resistance or below the support when the New York session begins. A breakout happens when price moves precisely beyond one of these levels. To confirm a breakout, you have to look for a strong candlestick close above or below the support or the resistance, accompanied by an increase in volume. As you can see, this support line happened during our London section. You can see a candle has closed strongly below, showing this is a sign of continued bearish price action. Same with this. This is another example. This happened during 8 p.m. Now let's look for a good example. A better example was this. This was the low that was formed. This was a support area that was formed during our London section, and this was a resistance that was formed during this section too, during the London section as well. So we have to wait for price to break strongly below or above wherever it wants to break out from with an increase in volume. Patience is key. Avoid entering trades too early without confirmation, as fake breakouts can lead to losses. Let the market show you its direction before committing to a position. You enter your trade once you confirm the breakout. It's time to enter the trade when you have confirmed the breakout, and they can do this in two ways. You can manually enter your trade. You can enter your trade, your buy or sell position. You can enter above your resistance zone, or in a sell position you can enter below your support zone after confirmation. So we enter immediately after we have seen a close below. In case of a bearish signal, we enter after this closed candle below. This is when we can enter in a selling scenario, while in a bullish scenario we can enter after we have seen a close. This is our high. This is a high that was formed during the London section. This was also a low. that was formed during the London section. So we would enter after the close of this candle. This would actually be a very good example. You enter the moment you see the close of this candle. Let's not forget our stop loss and our take profit levels. But before that, we can also enter our trade using pending orders. We can place our buy stop order slightly above the resistance level. You can place it slightly above the resistance level in case of a buy trade, and you can place it slightly below the support level in case of a selling trade. This allows you to automate your entries when price reaches your desired level. Using pending orders can help you avoid missing opportunities during fast-moving markets, especially during high volatility in the New York session. Now back to the stop loss and take profit level. Remember, risk management is crucial when taking breakout trades. Always set your stop loss to protect yourself from unexpected reversals. For buy trades, you have to set your stop loss just below the broken resistance line. Just below the broken resistance line, that's where you can put your stop loss. Then for sell trades, you can put your stop loss just above the broken support line. When support has broken, you put your stop loss just above those area. Now for take profit, you aim for at least 1:2 or 1:3 as the case may be. This means that if you have a stop loss of 20 pips, your take profit should be at least 40 pips away. This approach ensures that even if some trades do not work, your winners will more than compensate for your losses. How do we manage our position? After entering a trade, you monitor it closely during the New York session high volatility period. Consider using a trailing stop to lock in profit as price move away in your favor. For example, if price is moving significantly away in your direction, adjust your stop loss levels to be in profit. You put it above your current price, or you put it above your entry area to have some gain, while allowing room for further movement. By actively managing your position, you can maximize profit while minimizing risks during unpredictable market conditions. Follow these steps will help you trade the New York Breakout Strategy effectively. Alright traders, we have come to the end of this video. Engage with us in the comments below. If you found this video helpful, do not forget to like, share and subscribe, and turn on your notification bell so that you couldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.